Hi, everybody. I'm Jennifer Ropiak. I run precious metals derivatives on NYSE Life US. Today, I'm at the exchange with JJ Kinahan, Chief Derivative Strategist at TDAmeritrade. JJ, what are some trends that you've noticed at TDAmeritrade for client trading?
Well, I think in terms of this space particularly is quite a big growth in terms of derivatives trading in our retail clients' portfolio. We had our earnings call recently, and our CEO, Fred Tomczyk, on there talked about the fact that derivatives trading was almost 40% of our daily trades now. So that would include options and futures. Because what's happened is the retail client has gotten so much smarter about how they use their money, realize that they can combine a lot of those strategies with what they're already doing in stocks to have a much more well-rounded portfolio that doesn't use nearly as much capital as just buying stocks.
Do you feel there is a role in a trader's portfolio for both mini gold futures, or YG, as well as mining equities?
Absolutely, and I think that they're a natural extension of one another. You know, you have financial products. We have 30-year bonds, 10-year bonds, 5-year bonds. So they're all kind of derivatives a little bit related to each other. This is a product that relates to other products that are out there. Makes a lot of sense. It also lets you play relative strength from one to the other. Maybe you think the miners will be stronger than gold, or gold will be stronger than the miners. Which will lead, which will follow on the way up and the way down. And besides that, maybe you just want to play one side or the other. I always think it's great when a trader has many more options of ways to play the same strategy in a way that makes sense to them and fits well in their portfolio.
What are some practical tips that you would give to somebody who wants to become an active trader?
The first one is to start smaller than you think. I know I'm with a brokerage firm, so I should say trade like a maniac, but honestly, it's to start smaller than you think. The easiest thing in the world to do is to become a bigger trader. The hardest thing to do is to get yourself behind the 8 ball because you traded too big. What you'll notice is that, especially as you're learning new products or learning how to trade a certain way, you get kind of that sick feeling in your stomach. You can get that with just 1 or 2 contracts as well as getting it with 20 or 30. So I think that's the biggest mistake I see many new retail traders make, is they trade way too big. Start small, have some success, learn mostly how not to lose money, and then you'll start to realize that you get in good habits, and that can lead hopefully to making some money.
Do you find that if a trader has long-term positions and short-term positions, that they might have them in different accounts, or should everything be combined?
Well, I think a lot of it will go to the person's individual needs. But, you know, I'll use myself as an example there. I do a lot of trading in shorter term, perhaps, have that in more of a trading account. But I also, hey, I'm going to retire someday too. There are things I want to hold for many years that I'll have in a longer term or an IRA type account. So I think if you know, if that fits your needs, to have separate accounts for everything, I think is a great way to go, and it kind of keeps you focused on what your goal is in each individual account.
Thank you, JJ.